Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that can be a real game changer for your finances: personal loans. Whether you're thinking about consolidating debt, funding a big project, or handling an unexpected expense, a personal loan can be a powerful tool. But with so many options out there, it can feel overwhelming. Where do you even start? Well, you're in the right place. In this ultimate guide, we're going to break down everything you need to know about personal loans in the USA, from getting approved to finding the best rates and even busting some common myths. So grab a notepad and let's unlock your financial potential together. First things first, what exactly is a personal loan? Simply put, it's a type of installment loan that you borrow from a lender, like a bank, credit union, or online lender. You receive a lump sum of cash upfront and then pay it back in fixed monthly payments over a set period, typically a few years. Unlike a mortgage or auto loan, most personal loans are unsecured, which means you don't have to put up any collateral like your house or car. This makes them a flexible option for all sorts of things. People use them for home renovations, medical bills, wedding expenses, and yes, one of the most popular uses is consolidating high-interest credit card debt into one manageable monthly payment. Now, let's talk about the big question on everyone's mind: how do I get approved? The key to approval lies in your financial health, and the most important factor is your credit score. Lenders use this 3-digit number to gauge how likely you are to pay back the loan. A higher score generally means you're a lower risk, which can unlock better interest rates and larger loan amounts. We're talking scores in the good to excellent range, typically 670 and above. If your score is in that sweet spot, you'll have a much wider range of options and more negotiating power. But what if your credit isn't perfect? Don't worry, you still have options. Many lenders specialize in working with borrowers who have fair or even poor credit. The interest rates might be higher to compensate for the added risk, but approval is still possible. If your score is on the lower end, there are a few things you can do to boost your chances. First, check your credit report for any errors. You'd be surprised how often mistakes pop up that can drag your score down. Dispute any inaccuracies you find. Second, try to pay down some of your existing credit card balances. Your credit utilization ratio, how much credit you're using versus your total limit, is a huge factor. Keeping it low, ideally below 30%, shows lenders you're not overextended. Another powerful strategy is to consider a secured personal loan. This is where you offer up an asset as collateral, like a savings account or a vehicle. Because the lender has a way to recoup their money if you can't pay, they're often more willing to approve you, even with a less than stellar credit history. You might also look into getting a co-signer. This is someone with good credit who agrees to be responsible for the loan if you default. Having a co-signer can significantly increase your approval odds and help you qualify for a better rate than you could on your own. Just remember, this is a big commitment for your co-signer, so be sure you're both comfortable with the arrangement. Okay, let's say you're ready to apply. Where should you look? You have 3 main choices: traditional banks, credit unions, and online lenders. Banks are a familiar option, especially if you already have a relationship with one. They can offer competitive rates, but their approval criteria can sometimes be stricter. Credit unions are nonprofit organizations that often provide excellent customer service and lower interest rates than banks, particularly for members. If you're part of a credit union, they should definitely be your first stop. Then, we have the rise of online lenders. These fintech companies have revolutionized the borrowing process. Their applications are typically fast and easy, and you can often get a decision within minutes. Many specialize in different credit profiles, so it's easier to find a lender that fits your specific situation. The best part? Most online lenders let you pre-qualify for a loan. This means you can see what rates and terms you might be eligible for without a hard inquiry on your credit report, which can temporarily lower your score. This allows you to shop around and compare offers from multiple lenders risk-free. I highly recommend pre-qualifying with at least 3 to 5 different lenders to make sure you're getting the best possible deal. Now, let's bust some common myths about personal loans. Myth number 1: you need perfect credit to get a personal loan. As we've already discussed, this is absolutely false. While a great credit score helps, there are plenty of lenders who work with a wide range of credit profiles. Don't count yourself out before you've even tried. Myth number 2: personal loans are only for emergencies. Nope. While they are fantastic for unexpected costs, their uses are incredibly versatile. I've seen people use them to start a small business, pay for education, or even fund a dream vacation. It's about using the funds to achieve your personal and financial goals. Myth number 3. The interest rate you see advertised is the rate you'll get. This is a big one. The super low rates you see in ads are usually reserved for borrowers with excellent credit who are borrowing a specific amount for a specific term. Your actual rate will depend on your unique credit profile, income, debt, and the loan amount and term you choose. That's why shopping around is so critical. Myth number 4, all personal loans are the same. Definitely not true. They vary widely in interest rates, fees, repayment terms, and lender policies. Pay close attention to the details. Look for origination fees, which are charged for processing the loan, and prepayment penalties, which some lenders charge if you pay off the loan early. Ideally, you want a loan with no prepayment penalty. And finally, myth number 5. Getting a personal loan will hurt my credit score. This one is a bit more nuanced. When you apply, the lender will perform a hard inquiry, which can cause a small, temporary dip in your score. However, once you're approved and start making consistent, on-time payments, the loan can actually help your credit in the long run. It adds to your credit mix and demonstrates responsible payment history, both of which are positive factors for your score. So, how can a personal loan transform your life and empower your dreams? Imagine you're drowning in high-interest credit card debt with balances spread across multiple cards. It feels chaotic and expensive. By taking out a personal loan, you can pay off all those cards at once. Suddenly, you have just one single monthly payment, likely at a much lower interest rate. This not only simplifies your finances, but can save you hundreds or even thousands of dollars in interest, allowing you to become debt-free much faster. That's a huge weight off your shoulders. Or maybe you've been dreaming of renovating your outdated kitchen or finishing your basement to create more living space. A personal loan can provide the upfront cash to make that happen, increasing your home's value and your enjoyment of it. It's an investment in your property and your quality of life. The possibilities are truly endless. A personal loan can be the bridge that gets you from where you are to where you want to be. It's a strategic tool for investing in yourself, your home, or your future. Before you sign on that dotted line, though, there are a few final things you must know. First, read the loan agreement carefully. All of it. Understand the annual percentage rate, or APR, which includes both the interest rate and any fees, giving you the true cost of borrowing. Know your monthly payment amount and the due date. Make sure you can comfortably afford this payment within your budget. Don't stretch yourself too thin. Second, create a solid repayment plan. If you're using the loan for debt consolidation, stop using the credit cards you just paid off. The goal is to eliminate debt, not create more. Set up automatic payments so you never miss one. On-time payments are crucial for maintaining and improving your credit score. And finally, borrow with confidence. Getting a personal loan isn't a sign of failure. It's a sign that you're taking proactive control of your financial situation. By doing your homework, comparing your options, and choosing a loan that fits your budget and your goals, you are making a smart financial move. You're leveraging a tool to improve your circumstances and open up new opportunities. To recap, assess your credit, explore all your options from banks to credit unions to online lenders. Pre-qualify to shop for the best rates without hurting your score, and always read the fine print. Whether you need cash fast for an emergency or you're planning a major life improvement, a personal loan can be an incredible asset. It's all about being informed and strategic. Thank you so much for watching. I hope this guide has simplified the world of personal loans for you and given you the confidence to take the next step. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe for more financial tips and tricks. Got any questions? Drop them in the comments below and I'll do my best to answer them. See you in the next video.